Hello trading friends and welcome back to Forex Focus, brought to you by IG. Holy smokes, what a move across stocks, currencies, interest rates. We're going to cover it all in light of the sticky inflation rate. We got CPI inflation here in the US stronger than expected. We'll dissect the number as well as the fallout in the S&P 500, NASDAQ and Dow Jones all lower significantly here post-CPI. US dollar significantly higher as US interest rates also moving higher, and what this could mean for those potential interest rate cuts that you were eyeing for 2024. We'll cover it all, but let's start with the inflation rate itself. As we had the CPI inflation data come out here in April, 0.1% higher than expected. Might not seem like a lot, but keep in mind, here we're looking at the headline inflation number that came in at 3.5%, expected at 3.4%. This was an inflation reading here in April that was already expected to uptick. And if you've been watching anything having to do with inflation and its effects on interest rates and stocks and everything else in the last couple of years, you'll know that right now, here in 2024, the Fed has been talking about interest rate cuts. No more hikes. They feel like they peaked in terms of the number of hikes that was required to bring inflation lower. And since inflation got down into the mid threes in the last handful of months here, everybody's been talking interest rate cuts. And so to have this number not only expected to be higher at 3.4%, but come in even higher than that expectation, upticking all the way to 3.5, highest since September of last year. Now there are renewed fears of, man, maybe they didn't go far enough with those interest rate hikes, so maybe we need to take those cuts off the table. We'll talk about those projections for the cuts in just a second, but that's why you're seeing the stock market move lower. The S&P crashing more than 1%, falling approximately $100, and depending on when you're looking, it could be a little worse than that, as this has been a stock market that's obviously been strong for the last several months, putting in fresh all-time highs a number of times. It's had its fair amount of blips, but this is a pretty considerable one, and now nearing lows since the start of March, the first couple of weeks of March there. And a lot of people wondering, okay, well, if you can fall, $100 from high to low off of this inflation data, if we get a couple more U.S. data points that point in the direction of fewer than expected interest rate cuts, and so much upside was seen in the stock market at the end of 2023 and the start of this year on the idea of, yeah, we know we're getting these interest rate cuts, just when are they going to come? If they price those rate cuts out even further, can the stock market here, the S&P, can it get back to 5,000 or even lower? It's obviously been there only a couple of months ago, so very much in the picture, and especially at this pace. And then, of course, you look at NASDAQ fell more than $300, and the Dow Jones and the Russell really saw some downside. Both those markets were even harder hit than the S&P and NASDAQ. Dow fell about $500 after this CPI inflation data. We'll continue to monitor where stocks go from here, as there's more U.S. data to come in April. But let's dissect the number a little bit further in terms of interest rates, because interest rates have kind of been the middleman, so to speak, to some of the sentiment being seen in stocks and in U.S. dollar that we'll talk to in just a second as well. Interest rates rose considerably off of this number. Not only did you have Treasury yields, the 10-year getting back about 4.5%, 2 years skyrocketed. Last time I checked, more than 20 basis points higher in terms of the futures off of this number. But you also had the Fed funds interest rate, which is a huge benchmark for treasuries and every market, the overnight interest rate that the Fed controls. And everybody's been monitoring these probabilities of when are we going to get these rate cuts? Because we've heard Powell talk about, like I alluded to earlier, we've hit the peak of rate hikes. We're looking at rate cuts by the end of 2024. When are we going to get them? Because at one point, people had priced them in for March. Obviously, we've already moved through that. We have a May 1st meeting that's coming up very soon. Very unlikely. It's a near 0% chance that we're going to get the cut at that meeting. And so we're looking on to June, and the odds were in the 55 to 60% range just a week ago, and now less than 20% chance that the Fed cuts in June. And so we'll effectively get halfway through the year, halfway through Fed meetings for 2024, and the market's projecting no cuts. And it was just a few months ago that the market was projecting 4, 5, 6, 7 cuts here this year, now pushing them on even further. And we don't have the odds here today, but the likelihood of no cuts in 2024, still small likelihood, but it has been rising, especially after this inflation number. Interest rates rising, projections for those Fed cuts moving lower as those interest rates rise in the futures market. But let's also take a look at the US dollar market, because interest rate strength in the US also leading to some US dollar demand, and the dollar versus the yen breaking through 30-year highs, highest US dollar price since 1990 relating to the Japanese yen. This is just a crazy market, a crazy chart, and as you've seen, amid the strong inflation, strong U.S. data for the last couple of years, and the hiking U.S. interest rates, we've seen a few different multi-year highs in this dollar-yen market, but now breaking another leg higher. I don't think anyone saw this coming, especially when the rhetoric has been in the U.S. that we're done with the hikes, we're looking at cuts, and the Bank of Japan just recently hiked out of negative territory for the first time in years. The market digested that news and still sees the strength in the U.S. and this U.S. dollar. Crazy price action in there, getting above 152, trading near 153, depending on when you're looking at this. And those are highs since 1990. And U.S. dollar was higher across the board after this news came out. Huge moves. We talk about that dollar yen because it's a big historical price extreme, but even bigger moves here today relative to the Australian dollar. That's almost a 2% move in one day. In forex markets, that's huge. A 2% move lower in Australian dollar versus USD. You had a euro market that's down well over 100 pips here today, as well as that pound down close to 150 pips against USD as euro gets under 107.5. Aussie is now not stopping at 66 cents. It's getting close to 65 cents. And this pound market also nearing 125. Big levels there. They're not multi-year extremes, but those are some big levels that this market has bounced off of a couple of times here in recent trading. We'll see if they hold again, or if this is enough to push the story of U.S. interest rate strength, U.S. data strength, and U.S. dollar strength to another level. We'll continue to monitor the price action across all these asset classes, but crazy moves in stocks, interest rates, and forex off of this hotter than expected inflation.